Every market cycle has a breaking point, a moment when everything feels calm, stable, and logical right before it isn't. And in 2025, we're standing right on that edge again. The signs aren't loud. There's no panic yet, no flashing red charts. Just quiet tension, the kind that builds before something big moves. You can almost feel it. This isn't just about crypto. It's about the entire global system, liquidity itself. Because everything we trade, everything we price, everything we think we understand about value, it all depends on one invisible thing: flow. When liquidity expands, the world feels alive. Assets rise, risk feels safe, credit feels infinite. But when it contracts, even a little, the illusion cracks. And right now, the world is preparing for a reset. Let's start simple. For the last 3 years, central banks have been tightening. They printed trillions during the pandemic, then spent years trying to drain it back out. The Federal Reserve shrank its balance sheet. The European Central Bank followed. Even Japan, the eternal money printer, started blinking. The result? Global liquidity has been suffocating slowly. Not crashing, just bleeding out. And yet, prices stayed high. Stocks didn't collapse. Crypto recovered. Everyone said, maybe the system is stronger this time. But that's not strength. That's lag. Liquidity takes time to show its consequences, just like gravity doesn't hit until you stop climbing. So where are we now? In a phase where liquidity and illusion are starting to diverge. Money is still flowing, but unevenly. It's not expanding globally, it's rotating regionally. The US dollar is strong again. That's a symptom of global liquidity contraction. Because when investors panic quietly, they run to the dollar, the world's oxygen tank. And when dollars get expensive, everything else gasps. Emerging markets struggle first, then corporate debt, then risk assets like crypto. That's the sequence every time. 2008, 2020, and soon, maybe again. But this reset isn't just about danger, it's about opportunity. Because liquidity resets are how the system cleans itself. Too much leverage, too much speculation, too much illusion, they all need a purge. That's how markets reboot. It's not pretty, but it's necessary. The irony is, most investors mistake contraction for collapse. They panic, sell everything, and miss the rebuild that follows. But smart money, real macro capital, watches the plumbing. They know liquidity isn't gone, it just moves. And right now, it's moving again. Quietly. Let's zoom out. There are 3 major liquidity engines in the world: the Federal Reserve, the Bank of Japan, and the People's Bank of China. Each controls a different valve. The Fed affects global risk appetite. Japan affects carry trades and yen liquidity. China affects credit expansion through exports and stimulus. When all 3 expand at once, global liquidity explodes. That's when you get massive rallies across assets. When they all contract, everything freezes. And when one of them blinks, the cycle turns. Guess what's happening right now? Japan is blinking. After years of holding the yen artificially weak, they're intervening. That means money starts flowing back into global markets. Not all at once, but drop by drop. And that's how every new cycle begins, quietly, invisibly, while everyone's still bearish. In 2025, the setup looks eerily similar to 2019. Back then, the Fed paused rate hikes. Global liquidity bottomed. Everyone was bearish until suddenly everything reversed. The same signals are flashing again. Reverse repo usage collapsing. Treasury liquidity improving. Central banks slowing QT. It's subtle, but it's there. Liquidity doesn't return with an announcement. It sneaks back in. So, what does that mean for markets and for crypto? It means we're about to enter a transition phase. The liquidity reset isn't the end of risk. It's the beginning of reallocation. Old capital will leave weak assets. New capital will seek stronger narratives. Bitcoin will lead first. It always does. It's the easiest, safest bet in a world rediscovering risk. Then Ethereum follows. Then the rest slowly, cautiously. Altcoins, RWAs, AI tokens, they'll wake up in stages. Not from hype, but from oxygen returning. But here's the part few people understand. A liquidity reset isn't just economic, it's psychological. It resets how people feel about risk. For 2 years, everyone's been scared. Scared to buy, scared to hold, scared to believe. But fear can't last forever. Eventually, exhaustion wins. People stop expecting doom. And that's when new optimism sneaks in. That shift in emotion is what fuels the next run. It's not interest rates. It's not ETFs. It's collective relief. Markets don't move on data, they move on permission. And when the system gives people permission to dream again, they do. The question is, what triggers it? What makes liquidity flip from contraction to expansion? Sometimes it's crisis. Sometimes it's politics. Sometimes it's both. If the US election triggers uncertainty, central banks will ease again. If global growth slows, stimulus returns. If credit markets strain, the Fed opens swap lines. All roads lead to the same place, more liquidity. Because the system can't survive without it. The irony is, the tighter they squeeze, the faster they're forced to loosen. That's the cycle of modern finance. Tighten to look responsible. Loosen to stay alive. That's why this reset isn't doom, it's design. It's how the machine breathes. And in that rhythm lies opportunity. Because those who understand liquidity don't trade price, they trade breath. They know when the inhale starts, everything rises together. Crypto, stocks, real estate, all float on the same tide. So if you want to predict the future, don't watch charts. Watch flow. Watch the balance sheets. Watch how quietly the oxygen returns. There's one more piece to this puzzle: technology. In previous cycles, liquidity moved through banks. Now it moves through code. Stablecoins, tokenized bonds, and DeFi liquidity pools, they're becoming extensions of the global money system. When central banks expand, you see it ripple instantly across digital markets. The border between traditional and crypto liquidity is disappearing. That's why 2025 could shock everyone. Because when liquidity returns this time, it won't just lift markets, it'll merge them. The same forces that move treasuries will move tokens. And once that connection is complete, there's no going back. People still think crypto is outside the system. But that illusion is fading. Crypto is the system, just the faster, digital part. And liquidity doesn't care what form it takes. It just seeks motion. When motion returns, so will the bull run. Not from hype, but from structure. Not from tweets, but from flow. That's what most won't see coming. They'll still be looking for reasons, headlines, or catalysts, while the real trigger is already in motion. The liquidity reset won't look like a crash. It'll look like a shift. A slow turning of the tide. Then, suddenly, everything will feel easy again. Credit spreads tighten. Volatility drops. Confidence returns. And the market starts climbing quietly until it's too high to ignore. That's how every bull run starts. Not with noise, with silence. So if 2025 feels boring right now, good. That's what the bottom of liquidity cycles always feels like. Calm, confusing, too quiet to believe in. But behind that silence, something massive is resetting. The pipes of global finance are being refilled. And when the flow returns, the moves will be violent both ways. The question isn't if. It's, are you listening for it? Because when liquidity comes back, it doesn't knock. It kicks the door open. So no, 2025 won't be a normal year. It'll be the year the system takes its next breath. A year of quiet panic, sudden optimism, and rapid rotation. Some will call it chaos. Others will call it opportunity. But everyone will feel it. Because liquidity isn't just a financial metric. It's the heartbeat of the global economy. And the beat is starting to change. When that first deep inhale begins, you'll know. Everything will move again faster than anyone expects.